Welcome to the second part in Madison College Budget 101 Education Series. This part will introduce you to some common budget terms that will appear in the later videos. We will also walk you through the budget process at Madison College. Budgeting is the allocation of limited resources to fund the college's service and facilities. It is a very important activity of Madison College. We know not everyone is familiar with the budget process and budget terminology. We'll start with the most basic term, budget. As discussed in the introduction, a budget is a map that guides an institution on its journey to carry out its mission. The budget is a financial plan based on estimates of expenditures and revenue for the fiscal year. Let's break down that definition. A financial plan means that a budget is putting dollar figures on an operational plan. For example, if we know we are going to have a college president, that is the plan, we add to our budget the cost of having a president. The fiscal year is the 12-month period that the college uses for accounting. The college is required to use July 1 to June 30 fiscal year. When written down, the fiscal year is represented in a few ways, which all mean the same thing. Expenditures are the amount of money spent, or in the case of the budget, planned to be spent during the fiscal year. At Madison College, we reflect our expenditures in the budget in two ways, by object and by function. This will be discussed later in Expenditures 101. Revenues are the source of money the college receives or plans to receive during the fiscal year. Revenue is only budgeted in one way, by source. When you compare budget presentations to the budget document, the only difference you should see is property tax is referred to as local government. Additional information about revenue will be discussed later in Revenue 101. That takes care of the definition of budget, but there are some other key budgeting terms. Another term you may hear used is assumptions. The budget office uses assumptions to estimate what is going to happen to the college's revenue and expenditures in the future. Some examples of assumptions may include changes in tuition, projection of the number of FTE students that will enroll in college for the fiscal year, and increases in the cost of providing health insurance for employees. Another topic you will hear a lot about is the college's projected deficit. Budgets can fall into one of three categories: surplus, deficit, or balanced. A budget surplus occurs when revenue exceeds expenditures. A budget deficit occurs when expenditures exceeds revenue. A balanced budget occurs when expenditures equal revenue. The college's budget is required to be balanced every year. The challenge is that there are typically more needs than resources to fund them. Many of the basic costs of operating the college are increasing, and there are frequently calls for new, expanded services to meet the student needs. At the same time, there are serious pressures on revenue due to state aid difficulties, limits on property tax increases, and increasing efforts to keep the college affordable for students. There are two ways to balance the budget: by changing the way money is spent or by changing the way money is brought in. Decisions about spending and bringing in money are made throughout the year and included in our financial plan during the budget process. The budget process at Madison College relies heavily on conversations among those at the college to make value-based decisions about what to plan to do with our money. The college's budget process runs for the entire year. Beginning in the summer, with determinations about future year assumptions, contingency amounts, and priorities. From these initial conversations, the budget office develops a budget model for both the upcoming budget year and the subsequent 9 years, resulting in a 10-year financial plan. This model budget is shared with the board, the college assembly, and the Financial Management Council in the fall. Also during the fall, the budget office begins the process of collecting budgets from budget managers and continues to refine assumptions and estimates in the model budget. By January, the budget office has two budget scenarios: the model budget and the initial budget. The initial budget includes all requests and priorities. It still includes assumptions, but unlike the model budget, which is what we expect to happen, the initial budget is all in, so it includes many things that likely won't happen. This is part of the challenge mentioned earlier. There are typically more needs than resources to fund them. The initial budget is refined through further conversations with the cabinet, members of the shared governance, budget managers, and the board. When the initial budget is complete, it is shared with the shared governance and managers. This gives them another opportunity to review the budget, further refine requests, and provide clarification. As additional information becomes known, such as tuition increases from the Wisconsin Technical College system and state budget actions, they are incorporated into the budget. This becomes the final budget, which is approved by Cabinet and then presented to the Council and the Board. The Board holds a public hearing before voting on the final budget. A balanced budget must be adopted by the Board before July 1. Balancing the budget is a critical component of the budget process. It is where we make decisions about what is important and what trade-offs we are willing to make to reach our goals. In the next videos in these series, you'll be provided with a better understanding of Madison College's revenue sources and expenditures. Then we will check back in about how to use that information to inform the budget process. Thank you again for participating in the Budget 101 series. The next video in this series is Revenue 101.